there is some conflict between Trump and the Federal Reserve. When you look at what Trump may be able to do, it's pretty unbelievable.
Hello, everyone, and welcome into CrushTheStreet.com. I'm Kenneth Amadori, and I'm joined today with Nicholas Green of FMT Advisory. And this is a man who's been spot on with this analysis, from going to talking about the Dow to gold ratio, getting into the miners, and talking about oil bottoming out at 26, and one of the few. And here we have what has happened with the stock markets hitting new highs, reacting to President-elect Trump. And we're going to get his thoughts on this, talk about interest rates, the dollar, and he's got a special investment idea that we're going to get to towards the end of the interview here, that you're really going to want to listen in. And, if you haven't already spoken to Nicholas Green, I highly recommend you give him a call, talk about the markets, talk about your financial situation, because he's honestly one of the smartest analysts out there, and it's very important that you're teamed up with the right mentors, the right people managing your money. And this guy, I couldn't recommend anyone else other than him. So Nicholas Green, thanks for joining me today.
Thanks for having me. It's a pleasure to be here, and that was a very kind introduction. Thank you.
Nicholas, let's start off with Trump and the markets. We got the stock markets hitting new highs here, and when I talked to you, you're like, this doesn't surprise me. And you were one of the few, everyone I talked to, shocked that stock markets are going up and gold is going down. Let's get your thoughts on this.
Well, I think if anyone's paying attention, right, I don't think anything is shocking anyone anymore. But yeah, so that's not shocking. I mean, the outcome or any way the markets have reacted. I mean, the markets are the markets, and the markets don't care much what we think, and the markets are going to do what they do. But some of it definitely makes sense. I mean, I understand some of the market's enthusiasm with the Trump victory for sure.
Well, and so in regards to the optimism, I mean, do you see the markets with really, now we're looking at debt levels around the world, public debt, private debt at record levels here, and the opportunity for investors to find some yield, it's pretty difficult. Do you see the Dow Jones going to 30,000 here before it has a 50 or 30% correction?
I don't know. I don't know what the Dow is going to do. It's not really meaningful to me in how I invest or allocate capital, whether it goes to 30,000 or 10,000 in the near term. It really doesn't matter as long as I'm positioned and buying deeply discounted names in the portfolios that are already cheap and reflecting various scenarios. I'm not too concerned about it. But when you think about the Trump victory, one of the first things on his agenda is to lower the corporate tax rate. So when you consider that he wants to lower the marginal corporate tax rate is 39%, and he wants to lower that to 15% to make us more competitive. Well, with a Republican House and Senate and Congress, he's probably going to get what he wants. And so he just gave the S&P earnings a 15-20% earnings bump, right? It hasn't happened yet, but that's a 15-20% earnings bump for the S&P 500. So he just made the S&P 500 15-20% cheaper. So it's not as expensive as it would have been under Hillary, just based on a corporate tax move. And then on top of it, Trump is talking about spending $500 billion to $1 trillion in infrastructure projects, and that's a lot of money going into real businesses and real jobs, which is all comes back around via tax form for the U.S. Treasury. It also creates a lot of ancillary type business and pickup in growth with restaurants and those types of things. Why you've got all these people out there, building engineers, all those types of things. And so the market reacting positively to Trump isn't too surprising. But Trump, there is some conflict between Trump and the Federal Reserve, which is interesting because Janet Yellen and he wants the Fed audited. He's been audited 13 times, and so it'll be interesting how it works between the Fed, though they're supposed to be independent, and Trump, since they're not really on the same side of the boat. It'll be interesting watching how that plays out. But those are something to keep our eye on the lookout for sure.
Nicholas, you were talking about Trump spending here. We're seeing gold pull back, and not many of us were expecting to see gold go below 1,200 again, and here we are. Last I checked, it was like 1174, and you're talking about a lot of spending Trump wants to do. What are your thoughts on gold going forward in a world where Trump wants to spend a lot of money and the dollar's getting stronger?
I actually think it makes perfect sense. And so with the Trump victory, even myself, less bullish on gold in the near term, less bullish in the near term. I think there's better convexity for investment dollars than gold with the Trump victory. I think gold will end up having its day again. It could be with another interest rate increase by the Fed and the markets realizing they can't raise them too much more. But it could be the reflation policies of Trump that ultimately lets gold higher. But I actually think I'm not saying that, I'm not telling people to get out of gold. I think it's still a wise thing to have as a position, but I think it's less beneficial with the Trump win than it would have been with a Hillary win. And so I believe there's better places for money right now than gold. And so the sell-off in gold is not surprising, but it will have its day again. It's undervalued relative to the monetary base, and that will work itself out over time. I just think that the Trump victory slowed that progress down because I do think there's better convexity for money than there. I think there's better options right now.
Let's talk about.
It doesn't surprise me.
Yeah, no, you know what? Let's talk about dollar strength here. It's an interesting dynamic. For many people, it's very surprising that the U.S. dollar, but when the U.S. dollar is the cleanest shirt in a basket of dirty laundry, it does make sense. With problems in Europe, problems in South America, and problems around the world, people are flooding into U.S. dollar. We're seeing the dollar get stronger, the strongest it's been in over a decade here. And with a potential interest rate hike, this will make the dollar even stronger. First of all, let's talk about what a stronger dollar would mean for the U.S.
Well, a stronger dollar is definitely good for U.S. domiciled companies that are just operating within the U.S. borders because it keeps them very, very profitable, and they're not facing currency headwinds on top of it. But I think a strong dollar has its limitations. I mean, if it gets too strong, then you start getting liquidity sucked out of our system from foreign central banks like China, and that's a reverse sort of quantitative easing, which we know is not good. So there's a limitation to how far the dollar goes, but I think that the dollar strengthening is also no surprise because really what the market has been telling us, right, is that Trump has more pro-growth policies. He's more for sort of unleashing the human potential that this country has. It's been a little bit locked up over the last bunch of years. And so that human potential can go a very, very long way. When you talk about the infrastructure money, job creation, lower taxes means higher profits. Higher profits means more investment in capital outlays, capital expenditures, growth projects. Companies can also spend more money greasing their wheels on their maintenance capital expenditures. Those are all very, very bullish for the U.S. economy, very, very pro-growth. How long-term sustainable it is hard to say, but definitely in the near term, it's very, very bullish for being pro-growth, at least on the surface. And so the market's reacting favorably to that with a higher dollar, a strengthening dollar, and a market that's been driven higher because of it. So it's sort of where you would think it would be in many ways, looking at it.
Sure. Well, and what is the stronger dollar going to mean for the rest of the world, the dynamic? And I know you kind of touched on that a little bit here. Foreign countries, how much of an impact is it going to have around the world?
Well, I think it's a pretty big impact around the world. I think it's a big impact here. I mean, I think there's a thing called PPP, purchasing price parity, and it's where currencies trade against each other, and how that affects imports and exports between countries. And so, of course, a strengthening dollar and a weakening currency everywhere else has its effects. How you play that as an investor is a whole different thing now, right? And so there's two separate equations there.
Let's get right into that, Nicholas. Okay. We've obviously seen the markets react to Trump. It was a shock, but the money is flowing certain places in anticipation of what Trump says he wants to do. So give us the picture that you've analyzed here. I know you've done a lot of work on this, and you got some interesting ideas here.
Sure. So I think one of the most important areas to look at with the Trump victory, actually not one of the, I think the most important area to be looking at either for the best convexity or the best optimal choice to play the Trump victory, or to potentially play the Trump victory not playing out the way the market thinks it's going to play out. And let me explain. He's hired Stephen Mnuchin. He's got John Paulson. He's got everybody just about on board that is for reprivatizing Fannie Mae and Freddie Mac. And the government owns 80% of both Fannie Mae and Freddie Mac, but the only way for them to get at unlocking the value they own in the shares is to reprivatize them and let them go back to being freely publicly traded businesses outside of the grips of the U.S. government. And that's exactly what the new treasurer wants, which is why he skyrocketed by 45% yesterday once the new Treasury Secretary was nominated, in Stephen Mnuchin. So when you look at what Trump may be able to do with Fannie Mae and Freddie Mac is pretty unbelievable. But when you look at Fannie Mae, for example, it's one of the most profitable businesses in the world. It's one of the great businesses. It's been around since 1939. It provides a really valuable service to America, without which we wouldn't have the 30-year prepayable fixed-rate mortgage. Without the 30-year prepayable fixed-rate mortgage rates would double. The housing market would implode. And so these are like vital institutions that provide deep liquidity for the mortgage markets. And so Trump, being a very shrewd businessman and understanding there's a corporate law and a corporate code of ethics, I almost believe that the probability is far higher than not that he reprivatizes Fannie Mae and Freddie Mac, especially considering who he's hired so far. And should he reprivatize Fannie Mae, Fannie Mae is probably anywhere between still a 600 to 2,000% return from here, because they're generating, just based on G fees of about 60 basis points. I don't want to get too complicated, but generating right now, Fannie Mae alone, about $10 billion a year in annualized profits as they continue to work their way through. If the G fees go up, they'll be anywhere between $12 and $16 billion annually. We're talking about one of the most profitable businesses in the entire world. You put a 10 to 15 multiple on that, and it's an easy 1,000% return from here. But remember, the government owns 80% of the company, just like they owned General Motors at one point, a good chunk of it, just like they own AIG, a good chunk of Goldman Sachs, Citigroup, and they were all let go out of conservatorship. The government sold their shares and actually made a mint, so they've made some good investment decisions. this has not happened yet with Fannie Mae and Freddie Mac, but should it, which we think it will at FFT Advisory, should it, the government will be able to generate about $250 to $400 billion in profits for the American taxpayers. Absolutely the right thing to do for the housing market, and it's the right thing to do for our constitutional rights, which is a whole nother conversation. Maybe we'll do another one soon to talk about that. But it is the right thing to do for America. It's the right thing to do for the Trump agenda. And it's the right thing to do for middle-class families in this country who want access to a 30-year prepayable fixed-rate mortgage so that our home ownership can continue to roll along in this country. And so it's absolutely the right thing to do. And if Trump uses that $250 to $400 billion for his infrastructure goals, well, then this isn't printed money, right? This is capitalized gains. And so, when you look at this, if this is a plan, which it very well looks like it may well be, this is a very, very good thing in the short term for America, and it's a very, very good thing for anybody investing in Fannie Mae, such as our clients at FMT Advisory, because there's going to be substantial profits to be made there.
Yeah, no, there you have it. Anyone who wants more information on that, be sure to contact Nicholas Green. Nicholas, when it comes to, like you're saying here, I mean, this is a pretty big game changer and a big revenue source potentially for the government. And, that's pretty substantial in terms of whether or not the government will have to print the money, or the Federal Reserve printing more money, or they resorting to actually bringing it in. And that's been Trump's whole thing. Like, hey, we're gonna pay for all these things. We're gonna fix the economy. We're gonna repatriate the money that's sitting.
Exactly. Not to cut you off, but you're exactly right. So I don't get off track. You're exactly right. The interesting thing is. So if you structure your position right in Fannie Mae, you can structure it so, you would only lose a little but potentially gain a fortune. But more importantly than from an allocation, from a just single investment perspective, let's just forget about it and forget about investing in Fannie Mae. But if he doesn't do this, it goes back to what you're saying. Well, if they're not going to reprivatize and capitalize on their share ownership in Fannie Mae and Freddie Mac, the government that is, if they're not going to do that, then where is the money going to come from for Trump's plans and his infrastructure goals and his agenda, which he's going to get because he has a Republican House and Senate. So where's that money going to come from? And if he's going to print it, the market's wrong. The dollar should not be rising, right? The dollar should be going down. Interest rates should probably be going down because the only way to get that kind of money is to print it and have the Fed monetize it. So it's very important, very, very important to see what Trump does with Fannie Mae and Freddie Mac, regardless of whether you invest in them or not, to see what direction what direction not only the country and the economy is going, but what direction you should be heading in your portfolio strategy. So it's very, very, to me, it's the most important pivot point that I've ever seen with an investment on which way the entire U.S. economy in the shorter term is going to head. And so it's a very, very good point that you make.
Nicholas, with interest rates potentially on the rise here, and we'll get your thoughts on whether or not you think that's going to happen here in December, what impact do you think that would have on Fannie Mae and Freddie Mac?
It won't have any if interest rates rise on Fannie Mae and Freddie. Look, the thing if you mean as an investor, if there's I first started investing in Fannie Mae.
Let me just clarify. So if interest rates go up and people slow down their spending because the cost of borrowing got more expensive, will that have an impact on Fannie Mae and Freddie Mac?
No. Not as investments. What you have to understand, the reason why they will go up so much is even today, even after the Trump victory, even today, Fannie Mae has a market cap of $28 billion. Again, they're going to generate $10 billion in profits. So it's just 2.8 times their current earnings. This is one of the best businesses in the world, right? And the best businesses in the world do not sell at under 3 times earnings. The best businesses in the world, the Googles, the McDonald's, the Berkshire Hathaways, the Facebooks, right? The cash flow generators of massively profitable businesses, the Visas, the MasterCards, the great businesses in the world. You can never, I've just never been able to buy them at under 3 times earnings. And that's what you get with Fannie Mae, even buying today, is you get it under 3 times earnings for one of the great businesses of all time if it's reprivatized. It won't be selling at 3 times earnings. So even if interest rates double, it's not going to materially change the royalty stream that Fannie Mae has on the mortgage market across the country. So higher interest rates may put a cap on the multiple the market ends up assigning Fannie Mae. Maybe it sells at a 13 times multiple instead of an 18 times multiple. But the runway, anytime you buy something that is basically you're picking up a dollar bill for 20 cents, 30 cents, it's almost impossible to lose money if the thesis is right. And so in this case, the thesis would be, Trump reprivatizing them. If he doesn't, then all bets are off. And again, it's whether you invest in it or not, it pays to pay attention because you'll want to change your portfolio strategy around a little bit at the very least.
Well, Nicholas, I always enjoy our conversations. Was there anything else you wanted to add in terms of trends and things you see happening here with 2016 ending and going into 2017?
Well, right now the markets are investing for a reflation trade, and so I would say that it would make sense that, initially speaking, when the areas that have been cheap are doing relatively well right now. Like the energy markets are doing really well right now. Of course, part of that is OPEC's decision to cap their production. But if you think about infrastructure projects, that takes a lot of extra transportation and oil to grease those types of projects, and so that's going to create demand for more usage for oil. If you think about all the other types of businesses that would benefit from the infrastructure spending, it would make sense those are going up. And but one thing I'd like to say about the mining industry, why I'm less bullish on the precious metals in here, I'd like to point out that during the housing bubble between 2002 and 2008, remember the economy looked great, though we know that it was based on a bogus bubble. The economy looked great. The housing market was going up. Employment was strong. We had high interest rates. Interest rates were hovering. You can buy a 10-year Treasury at about a 5.5% yield, and everything looked pretty decent in the economy. But people forget during that period it was an inflation trade. Oil also went to $150 a barrel. And during this whole segue where everything looked great and oil was heading much higher, the other thing that was doing much better and was having a nice little bull market in there was gold and silver, and the miners specifically were doing really, really well. So if it ends up being a true reflation trade based on Trump monetizing or printing even money to do his infrastructure projects, and it does start getting inflation to creep up year over year, one of the things you need to be careful of is inflation running too hot, which can crimp common stock or common businesses' profit margins, and so that could be dangerous for the markets, but it'd be really bullish for other areas, and so you can hedge that out with those other areas. And one of those areas would be if the reflation trade or the reflation really starts kicking into gear, would be the miners, which are still relatively cheap to the price of gold even now, and just historically in context. So I think they'll have their day again. I think it's just been postponed because, again, I'd much rather personally be invested in Fannie Mae right now than a speculative gold miner, because I think there's a real potential in something that would be great for the country to make 1,000% on, and I believe that's where it's heading, and so I think that's the best convexity now for investment dollars. But doesn't mean I don't. Like, for example, it doesn't mean I still don't own a little Seabridge Gold, but just as a percentage of counts, it's just very, very light there and much heavier in other areas. But I think the point is that there's going to be a reflation, and interest rates are going to go higher, and all those types of things. There'll be a point down the road where it will be bullish for certain types of commodities, and that's something to look out for as well.
Yeah. Well, everyone, Nicholas Green of FMT Advisory, again, after listening to him, really one of the most level-headed people, analysts out there. And really, that's kind of what you want when it comes to your money. You don't want to be going off the deep end because, as you know, right, Nick, the people that go to you in many cases are getting wiped out because they're going 100% on something that they shouldn't be going 100% on. So with that, anything you'd like to share, or if people want to reach out to you, let them know a little bit more about what they will get.
Well, I think I've hit the big points that are important today, but I would say what I see often is people they don't want to change their minds, right? They like data or facts will change, but they don't change, and that's a recipe for poor performance and poor asset allocation. If things change, if facts change, if inputs change, you need to be able to be open-minded enough to change. And sometimes people just need to work with a money manager to sort of keep them on track and keep them level-headed. But yeah, so I've enjoyed the conversation, and I appreciate you having me on. It's been fun.
As always, sir. Well, you have a great day, and we'll be sure to have you on in the near future.
Thank you so much. Look forward to it.